If you ever listed yourself as unemployed, retired on a loan or credit application, even if you own the business, look, you could be killing your chances of getting approved, even before banks even look at your business. And it's not just about what you write on there, it's about what they see behind the scenes. So let me break all this down for you today on my video. If you're new to my channel, my name is Chess. I've secured well over 400K in business funding for my businesses, and I help business owners and entrepreneurs just like yourself secure funding for their business. So look, everything I teach here is based on real world experiences, either from myself or from my clients' experiences. So look, let's get right into it, and let's start with one of the most common mistakes that I see, and that's how you describe your role in business on your applications also. A lot of people, they like to say they're unemployed, retired, or they're receiving pension, even though they're running a full-time business. And to the banks, that looks confusing. It sends mixed signals. It says, I don't actively work in this company, which makes the lenders question your ability to pay back your debt. Even if the business itself is making a lot of money, what works better? Listing yourself as the CEO, founder, or even better, an employee of the company will work too, especially if you're paying yourself on payroll or do distributions. That employee designation tells lenders your business has structure and you actually draw income from it. And that creates a separation they're actually looking for between you as an individual and as a business as its own entity. And that small shift can make a major difference when you're applying for credit or any type of loans. One thing I see way too often is people inflating their income or the revenue numbers thinking it'll help them get approved for more money. But here's the problem. Banks and lenders might not ask for tax returns right away, but they're not just taking your word for it. They're using scoring models to cross check the numbers automatically. These algorithms look at things like the industry code you listed, your business's zip code. Another thing is like how old your business is, how your business earns revenue, how much cash reserves is in the bank. Also, how many employees are working for you in your company. And even if your personal credit limits, they're going to look at too. So let's say that you got a business that's only a year old and you're in a real rural area and your personal credit cards have $1,000 limit, but you list 500K in annual revenue. That's going to look off and the system will flag it. Now flip it. If you're in a big city with strong personal credit, a 5-year-old business, and you list 500K, that's going to sound a little bit more realistic, right? It fits the profile. And the point of all this is going to be honest. If your numbers are way off than the banks will expect, based on your situation, they're not going to deny you. They might even blacklist you from applying again. And here's the part a lot of people forget. Banks are looking at you even more than they're looking at your business. And why is this? This is because unless you're applying for super high tier corporate funding, you're going to personally guarantee everything that's going to be debt. So banks are going to dig into your personal credit and compare it to the numbers that you put on the applications. If you say your business is making 400K, but your highest credit card limit is $1,000, that doesn't really match up to them. The only thing you've ever financed is a used car. They're going to question you whether you handle enough credit to be trusted with a large line of credit for your business. So we want to make sure that your personal profile supports your business claims. Otherwise, the numbers just won't add up and underwriters will just move on. Now, here's something people rarely think about, but it's going to be the biggest reason applications get denied instantly. It has to do with how many places you've been applying for and where are you applying also. So let me explain all this too. Banks aren't just looking at your hard inquiries, they're also looking at the underwriting networks behind those banks. And look, most people don't know is most people don't know is that many banks use the same third party underwriters. For example, FNBO, Elon Financial, or even TCM banks. So you apply for four different banks in 1 week, and look, they all use the same underwriters. You're essentially applying for multiple times in the same kind of sequence. That makes it look like you're aggressively shopping for credit, or even worse, you're fishing for funding. So if you've ever thought, man, I applied to five banks and they all got denied by all of them, this might be the reason why. Before you apply, ask what underwriting network the bank uses. If it overlaps with other banks you applied for recently, I will wait 30 to 60 days before submitting a new application. And here's another subtle but critical mistake that a lot of people make all the time. It has to do with the single question almost every funding application. What's the purpose of this loan? Now, I know it feels like a throwaway question, but look, it's not. If you choose answers like, for example, debt consolidation, something you hear many times before, or to pay off your student loans, let's not do that, for your business expenses, or to cover your personal expenses. Guess what that tells the banks? You're basically telling them, I'm in financial trouble. And if that's the truth, those answers are often going to tripwire that automatic lower approval odds or even shrink your credit limit. Instead, I will pick something that shows growth intentions. For example, things like marketing, working capital, marketing budget, or even equipment upgrade. The best thing that I like to use is going to be business expansion because it shows that you're growing. And that one change can be the difference between a 5K starting limit and a 50K approval. So let me give you a real world example of exactly how this plays out. So one of my clients, his name is James, he's a real estate investor and he's based out of Atlanta. He owns three rental properties and he was looking to pick up a fourth property. And he had solid credit, a strong rental income history, and he came to me for help getting a 50K business line credit for his next unit. He applied to a lender on his own and he got denied. But when we reviewed the application, I noticed that he selected debt consolidation as the reason for the funds. He didn't know better. From the bank's point of view, it made him look like someone that's struggling to manage his debt, not someone looking to grow a business or his portfolio. So we applied again, and this time through different lenders, and updated just one small thing: the loan purpose. We changed it from we changed it to capital for property rehab and tenant acquisition. Same credit, he had same income, same business. And that time he got approved for full 50K. And that's the power of positioning. Because at the end of the day, it's not about how much your business makes or how many years you've been operating. It's about the story on your application. What does it tell? And every single line, from your job title to your revenue and even the reason for the funding, it says something about how trustworthy or consistent and maybe even scalable of your business's growth that you are. And banks, they're listening very closely. If even one part of the story does not line up with them, that could be the reason that you're going to get denied or underfunded. So look, if you need one-on-one help to help securing 100K plus in business funding, or you want this completely done for you, apply to join my mentorship or my done for you program in the links in the description below or in the pinned comments below as well. This is Cashflow Chess. I'll see you guys in the next one. Peace.